Hello, I'm Tim Beggins, president of Elk Trading Company. In this, the natural gas weekly recap. Natural gas prices are higher, currently trading 378, up 18.8 cents or 5.21%. It's all about the weather, and it's going to be hot here in Texas next week. Let's look at the daily chart here, the spot June contract. Right now, again, trading 378.40. We are above the first resistance level on the pivots at 370 and one tick. Currently, the next resistance level is 381. We got close overnight. We're currently as high as 379.30. So let's take a look at what happened yesterday. The EIA natural gas storage report came in at 104, plus 104, which is about 5 BCF above expectations, and prices did initially decline, but recovered throughout the day. Everybody is taking a look at this 5-year average, up 1.4% over the 5-year average, currently right now at 2.145 BCF in storage. But this is a waste of time. The 5-year average is from COVID times, 2020 and 2021. We also have higher demand from commercial industrial, higher demand from residential, higher demand from LNG. And now here comes data centers. So the number to look at is this number from a year ago. We're still 16.1% below last year, and demand is increasing, not decreasing. So throw out the 5-year average comparison. And let's take a look at the hourly chart. As you can see, we are about to test this 381, the second pivot resistance of the day. And above that is 389.70. The RSI is turned higher and is showing that we do have strong momentum. But let's take a look at what's going to happen for next week. As you can see here for the ERCOT grid and market conditions, we currently are looking at some very high solar and eventually wind later this afternoon, getting as high as 36,501 megawatts, when we have demand today at about 58,000, which means there's going to be some more gas going into storage. So next Thursday's storage report is going to be a little high, potentially around the triple digit mark again. But let's take a look at those front to back spreads. Because the front month is now climbing, the front to back spreads have started to come in as we expected. And right now, as you look to see here for the Jan versus June contract, we're currently trading at 144.10, down over 10 cents on the day, or over 6.85%. Again, the break even here, 160 for storage costs. So looking for this particular area here around 144 to see if that holds as support, all the way down to 144, 133.80. So that would be our first support level for this particular spread. And here's the Jan versus October. Again, the break even here is at $1, so that would be our first test of support here coming up. As you can see, the weather is looking very nice for Texas all the way across the eastern half of the country. So the 8 to 14-day temperature outlook has above normal temperatures around Texas and Florida, all the way up through the mid-Atlantic states. So let's take a look at what's causing this thing to jump. As we said before, your first 2 consecutive days with 90-degree temperatures in Dallas is your go signal for natural gas. And guess what? Here we have it. Tuesday, Wednesday, and Thursday. This is coming off of Weather Underground right now. This is moderating back and forth with even higher temperatures on some other forecast models, having Dallas get up as high as 99 degrees. We've had a lot of rain for the last week, which means the ground moisture is very, very high. So as these temperatures climb, the humidity is going to climb, and the AC load is going to be higher than just what the temperature dictates. And don't forget, we have a nice drought in the Southwest from San Antonio all the way back through El Paso, parts of Arizona, New Mexico, and parts of Nevada. So this will mean higher AC load in the Southwest as well. Let's take a look at the long range forecast. And here's what's issued for May. And it's the ENSO probabilities. And guess what? Here it is. November, December, January, and now February are all neutral. ENSO neutral years. So let's take a look at what happens during that pattern. It's colder for the upper Midwest. And this is the perfect triangle from Chicago to Boston all the way down to Atlanta. That's your populated weighted natural gas demand, really sweet spot in the US. So we'll at least get some very cold temperatures expected for this winter, which means we've got a really good year for natural gas. Let's take a look at some of those natural gas stocks, the stocks that have a high short float, have a market cap between 10, or excuse me, 2 and 10 billion dollars, and this is in the oil and gas E&P sector. As you can see, it's the same stocks as we've been looking at before, and these stocks are starting to show, yep, green everywhere. And this is for the 1 week outlook. Everybody but Murphy is up on the week. The strongest is CRK or Comstock Resources. Why? Because it's natural gas focused. And crude oil has been down for the last week, which has been pulling pressure on the Murphy, the Northern Oil and Gas, and even the Magnolia Oil and Gas, and a little bit to CNX as well. But CRK, Comstock, is just natural gas. So therefore, we're going to look to see if this continues to hold for natural gas prices. Right now, currently trading at 378.60, up 19 and a half cents. Please let us know your thoughts in the comment section below. Hit that like and subscribe button. Thanks for listening. We'll see you soon.